Warren Buffett, the Oracle of Omaha, once prophesied about the rise of Japan. Now it seems his prophecy is coming true. Buffett, a name synonymous with successful investing, had foreseen a time when Japan's financial institutions would experience a surge in profits. And that time has arrived. Major institutions like the Mitsubishi UFJ Financial Group Inc., with their vast reserves at the central bank, are now in a position to generate higher returns. With the Bank of Japan's recent announcement to offer a 0.1% interest on balances exceeding mandatory reserves, these banks stand to witness a significant boost in their earnings. It's a period of unexpected profits, a period foreseen by Buffett. Indeed, Buffett's prophecy is no longer just a forecast but a reality. A closer look at the financial landscape reveals intriguing insights. Recent Bloomberg reports have shed light on an interesting development in Japan's financial arena. The country's principal banks, including the likes of Mitsubishi UFJ Financial Group, have amassed substantial reserves at the Bank of Japan, or BOJ as it's commonly known. These reserves amount to an eye-watering 106.7 trillion yen. That's equivalent to $712 billion, and until now they've been sitting there, not earning any interest. In addition to these reserves, these banks also hold another 79.4 trillion yen in deposits, which have been earning a meager 0.1% interest. But the winds of change are blowing. The BOJ has recently announced that it will offer 0.1% interest on balances that exceed the mandatory reserves. This seemingly small shift could have a substantial impact on the bank's revenue streams. With the new interest rates in place, these institutions could see their annual interest earnings increase by about 100 billion yen. This shift represents a significant boost to their income and paints a promising picture for their financial future. This development is not just a boon for the banks, it also signals a potential period of unexpected profits for the country's financial institutions. The repercussions of this change will likely be felt across the financial landscape, affecting everyone from the banks themselves to their investors and even the broader economy. A significant boost to their income seems imminent, thanks to this financial restructuring. This exciting development is just another example of how the financial world is constantly evolving, offering new opportunities and challenges for those who know where to look. As we delve deeper into the financial happenings, the analysts' optimistic projections also command our attention. The winds of change have been blowing favorably for Japanese banks since December 2023. Their sales have caught the gusts of positive prospects, and they are now speeding towards a prosperous horizon. A key player in this narrative is Goldman Sachs, the multinational investment bank and financial services company. Their buy ratings on Mitsubishi UFJ Financial Group, Sumitomo Mitsui Financial Group, Mizuho Financial Group, and Sumitomo Mitsui Trust Holdings have been like a beacon of hope in the financial storm. These ratings not only reflect the bank's current performance, but also forecast a bright future. These Japanese banks are well positioned to reap the benefits of the rising yen interest rates. This is a significant development that promises to boost their financial prospects. The rising tide of interest rates is expected to lift all boats, and these banks are no exception. But there's more to this optimistic outlook than just rising interest rates. Other favorable developments are also contributing to the bullish stance on these banks. A key factor is the reform in corporate governance. This reform promises to enhance transparency, accountability, and efficiency in the banking sector. It's like a fresh coat of paint on an old building, making it more appealing and valuable. These developments are not just good news for the banks, but also for investors. The bank's strong positioning in the face of rising yen interest rates and corporate governance reform indicates a promising return on investment. It's like a treasure map, guiding investors towards a chest full of golden opportunities. So what does all this mean for the Japanese banks? Well, they're standing on the edge of a cliff, ready to soar into the financial sky. Their wings are spread wide, catching the wind of change. The sky is clear and the horizon is bright. All they need to do is take the leap of faith and fly towards the promising future. Indeed, the Japanese banks stand on the cusp of a financial upturn. Warren Buffett's venture into Japanese stocks was not a recent decision. It's a fascinating tale that dates back to July of 2019, when the Oracle of Omaha turned his keen investment eye towards the land of the rising sun, specifically focusing on 5 financial conglomerates: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. These companies, diverse in their operations, yet unified in their financial prowess, caught Buffett's attention, not by accident, but by design. Each offered unique potential for growth, and as we've come to expect from Buffett, he was playing the long game. Fast forward to April of 2023, and we see Buffett increasing his investments in these Japanese stocks. In hindsight, it appears he was somewhat anticipating a potential shift in Japan's interest rate policy, a move that would ultimately lead to promising returns. Since Buffett's initial investment in July of 2019, these stocks have delivered quite the performance. Sumitomo, for instance, generated yields in yen of an impressive 117%. Mitsui, on the other hand, took it a step further, delivering an astounding 276% yield. These figures are a testament to the potential of Japanese stocks within a value investment strategy. There's no denying it. Buffett's foray into Japanese stocks was a calculated and strategic move, one that has since yielded significant returns. It's yet another chapter in the storied career of one of the world's most respected investors, a tale of foresight, strategy, and the power of long-term investing. Buffett's investment strategy in Japan has certainly paid off, with impressive yields from these stocks. It's a reminder that in the world of investing, patience, research, and a keen understanding of market dynamics can lead to fruitful outcomes. Buffett's interest in Japanese stocks isn't fleeting. This is the message that was echoed in his latest annual letter to shareholders. Warren Buffett, the Oracle of Omaha, emphasized on his company Berkshire Hathaway's passive and long-term interest in these Japanese conglomerates. He drew a comparison, likening their diversified activities to Berkshire's own business model. This comparison isn't a casual one. It's a testament to the faith Buffett has in these conglomerates and their potential to generate returns in the long run. But what is it that makes these Japanese companies such a compelling investment? The answer lies in their shareholder-friendly policies. Buffett praised these companies for their share buyback practices and dividends. He lauded their commitment to returning value to shareholders, a practice that is dear to Buffett's own investment philosophy. These share buyback practices work in favor of the investor. When a company buys back its own shares, it reduces the number of shares in circulation. This leads to an increase in the earnings per share and often results in a rise in the stock's price. Dividends, on the other hand, is a way for companies to share their profits directly with the shareholders. It's a tangible return on investment and is particularly attractive to long-term investors like Buffett. So Warren Buffett's interest in the Japanese stock market isn't just a passing fascination, it's a calculated move, backed by a deep understanding of the market and its potential. Buffett's investments in Japan are not just about the present gains, but also about long-term growth and stability. It's about investing in companies that not only generate profits, but also value their shareholders. It's about recognizing the potential in foreign markets and making the most of it. In essence, it's about playing the long game, the Buffett way.